Well, the stock market continues to melt to the upside. Meanwhile, a lot of the internals are catching fire, that's for sure. In the last episode of the Stock Market Brief Show, we talked about this quote from Wayne Gretzky: skate to where the puck is going, not where it's been. So where will the puck eventually go? That's what we're going to discuss on today's episode. Let's get into it. Welcome back, everybody, to the Market Dashboard. We're going to start off here in the 11 sectors that make up in the S&P 500. This is week-to-date performance. Now, something's very interesting here. Consumer discretionary technology led the way, and those hold a big weight on the S&P 500. However, even though that they finished up significantly for the week, the overall market pretty much stalled out. Well, the other two important sectors, financial and energy, well, look at, they are complete lead weight. Energy being down 5% on the week and financials down 2.81%. What do I mean by stall out? Just look at the S&P 500 week-to-date performance, 0.3%. It didn't go anywhere at all, which means what? The market completely stalled out here. Is the market going to keep prepping for some more just sideways action? Are we going to continue to lift the S&P 500 up? Well, we're going to be getting into that. We're going to first look at the relative strength here. What I want to call out is consumer discretionary has actually been weakening on this relative strength rotation tool here. And XLU has been seeing some pretty good improvement overall. Now, this is interesting because XLU is more defensive posturing, and it definitely outperformed the S&P 500 by a pretty decent margin, along with the other sectors in the S&P 500. If we look into consumer discretionary a little closer, Tesla has had a very strong week, up 10%. Just know this thing still looks very strong. On Friday's performance, it looks strong, so it can head higher, holding consumer discretionary together. However, we've seen Tesla unwind quickly before, so if that happens, consumer discretionary is obviously going to feel some pressure. Now, Amazon's another big holding, and Amazon put in a shooting star type candle as it's getting overextended from the daily Bollinger Band up here. So this also, if it starts pulling back slightly or consolidating, that could put a pause on consumer discretionary as well. Here's Home Depot. Home Depot broke out on earnings of this flag pattern, and it is just on a monster tear. But just notice how it's trading outside the upper daily Bollinger Band right here on a very extended RSI. When this happened before like this, it went through a period of consolidation, right? So this is another big holding in consumer discretionary. So if this is going to go through another period of consolidation, that's what we need to watch for. Can these things get overextended even further? Absolutely, right? They definitely can, but just know that nothing just goes up in a straight line without coming back down to consolidate, and coming back down as far as a pullback goes or a period of consolidation. So you have these three big names in consumer discretionary. They're getting a little bit overextended, but there's still the possibility that they can hold together overall. NVIDIA, let's start talking about tech because they were another big performer. NVIDIA, this along with Tesla have been holding the entire market up. Now it came tagged the weekly 5 EMA, and then it closed at pretty much the all-time high. It closed at an all-time high, but it closed almost at the high of the week too as well. So it closed at 329.85. It is getting pretty darn frothy over this 20-week moving average, and also clearly it's above the 30-week moving average. That's been in a nice uptrend here too. RSI also getting pretty frothy here. But if you take a look at the daily time frame, it still looks like it has room to potentially push. And NVIDIA is one of those heavily retail traded stocks. And you can just see the call options in there that it's just crazy. You know, if it goes down a little bit, it's just bought right back up. And this market has been really trading on just massive amounts of options and, you know, very few stocks. So there's a lot of flow coming into these big names, and we're seeing that take place. So if there is an unwind, you know, where's that money going to rotate into, which we'll be talking about. But overall, NVIDIA broke out of this bull flag on earnings, and it is still looking very strong. Another closing all-time high here. So this still, to me, says I can push higher a little bit from here before a period of consolidation. But just note that when we maybe get some sort of blow-off move, or if we even do, you know, just be very, very careful, because, you know, you don't want to be the person that chases it up and then goes through a drawdown or a period of consolidation, okay? You want to be a little bit more patient. Microsoft's another one that's just been constantly just ripping higher and higher, and it shows no signs of slowing down. Perhaps we get a little period of consolidation here, but Microsoft, huge market cap, and it's just just been an absolute monster overall. So you have to wonder, if this does start seeing a period of weakness, what's that going to do to the overall market? Apple also, another big mover out of this pennant right here, closing at another all-time high on some recent news around electrical vehicles. I don't have that in front of me, but just take note, big strong moves that go completely vertical. Typically, we'll get some sort of a retracement, pullback at some point, and you can see here the RSI is getting pretty frothy. So yeah, I've seen Apple rip for multiple days to the upside. Maybe we're getting through this period, as we can see, a lot of volume to support this move, but this is not one of those things that I'd want to chase for a multiple day hold at least. Like if you're intraday trading, that's a different thing. Now, why I'm bringing this up is because as these big tech have all the eyes are on big tech, what are we seeing take place at the other sectors? Well, financials have been completely obliterated along with energy. And if we take a look at financials broke down from this area, and we just saw some really strong sell side activity. Now it is pulling into an area of support where we have previous resistance, and we can see sometimes resistance can turn into support. So that's in confluence with the 100-day moving average. We're overextended on the downside of the daily Bollinger Band, but we were pretty tightly contracted, so this could be a Bollinger Band squeeze. So there could still be some more sell side activity that takes place here, but this zone in here could be an opportunity. So what I'm thinking here is that if financials have been getting just completely destroyed and they're getting somewhat overextended to the downside, still, I mean, they still have potential to go further down. But you got to wonder if people start rotating out of that because tech starts to consolidate or pull back, where can that money flow into? And that money could very well flow into some of the financial names as well as potentially even energy. So that is kind of where my eye's been. And if we even take a look at a short-term 15-minute chart, just take a look at this. XLK has been just from November 1st, it's just been ripping up higher and higher. And XLF, obviously from November 1st, it's like a big alligator mouth opening up. So you have to wonder, okay, so if these have this negative correlation taking place right now, if the XLK does start consolidating or pulling back, you'd have to wonder to see if financials are going to get some of that flow or some of that rotation, which could present itself, like I said, a pretty good opportunity. Let's hop into the S&P 500. Weekly time frame. Look, it was an inside trading week for multiple weeks here. It doesn't look bearish. We are, RSI is overextended, right? We're trading right at the upper Bollinger Band, but we're still above the weekly 5 EMA. So, and this looks strong. It looks like if we start breaking out of these highs right here, so let's just call it a high 47.17, like it seems to me that it can scream higher. Right? Especially if I love these setups right here on individual stocks trading inside candles. But just note that if it starts breaking down from the low or even the low of this candle, that means we're getting below the weekly 5 EMA, and it could see some period of weakness or a subtle pullback. So things are tightening up, right? We say this often. Expansion, that big candle, that move, can lead to contraction. Contraction are these small candles. So contraction is going to lead to more of an expansion. And you can see here, big strong candles up, smaller range candles here. Momentum is slowing. It's probably preparing for somewhat of aggressive move here in the near future. Is that to the upside or the downside? Well, I couldn't tell you, but we can say is if it breaks above here, we can press higher. If it breaks below there, be mindful of risk. We can head down to 45.50 here on this weekly time frame, which would put us right at this previous resistance right there. Okay, so overall, when you look at this price action, price is the most important aspect in all of this, and the market continues to press itself higher. S&P 500 on the daily time frame. Subtle negative divergence right here that took place, right? And we're just bumping in, could call it a double top. Market's been pressing higher and higher and higher right here. The last trading day, not the greatest looking candle as it gapped up and then engulfed the range, just the body, sorry, not the entire range, but the body of the previous week. So it's not like that bearish of a candle in looking at this, but just note that, it's a period of consolidation. That's kind of what we were talking about. So if it starts cracking down through the 20-day and through this low right here, yeah, we can head lower. And like I said, it'd be right around 45.50. That would be around this lower Bollinger Band and the 50-day moving average. So that's what you need to prepare for if the S&P 500 wants to sell itself off. What do I think what can happen to the S&P 500 if tech sells off? Well, if financials continue to see sell side and then on top of that, tech sells off too, I think that this is going to be, a pretty gnarly move. It could be a very fast hit, like a big red day, like something like that. Whereas if tech is kind of holding itself together or even falls a little bit, but a lot of the small caps, the IWM or financials start to perform, then I think that we just continue to maybe consolidate. That would be my best guess, but we'll get into some more indicators here soon. If you take a look at the VIX on the 30-minute time frame, we did fill that gap that we were discussing. The VIX continues to kind of just trek up higher. Meanwhile, the S&P 500 is doing the same exact thing. So just very, very interesting time to say the least. And when things don't make much sense, you can try to find the why, but the why really doesn't matter. The plan really matters. So all you need to do when you see things that don't really make sense is just take your foot off the gas a little bit and take it easy. That's really what it comes down to. Dow Jones did have a down week of 1.38%, and we're kind of pulling just slightly into this area of 35,500, this previous resistance that can potentially act as support. But we have the 20-week and the 30-week that we're still above. Now, bears can step it up because we did close below the weekly 5 EMA, and it has been a while, multiple weeks, since we have the last time since we closed there. So, overall, bears have the ability to do some damage. Will they? They haven't so far, but will they now? Also, pretty nasty looking kind of evening star pattern, right? You get a big move here, then you get this candle, and then you get more sell side taking place. So we'll see here with the bears if they can get any follow through coming up here next week, which next week is a holiday week, so typically less trading volume overall anyway. Transports tagged the weekly 5 EMA, held as support, saw a little bounce from that area. So that is still good from a positive perspective as far as when you look at Dow theory. So the Dow Jones Industrials, they closed below it, but the transports held it. So if this starts to give way, that can also, present itself a little bit of, just fear, I guess you can say, for the Dow Jones. And if you look at the daily time frame, you can see a little bit more clear. This zone is still technically an area of support. We're still above the 50-day, right? There's still previous resistance right here that can act as support. We're at the lower Bollinger Band. So, if we do get some crazy gap down, be very careful, right? Because we could be going through a period of some more consolidation or just a deeper pullback correction that takes place. The RSI below 50, pretty much pointing straight down. PMO, it's getting some PPO, it's getting pretty aggressive, move to the downside. So we're going to have to see this start to curl itself back up, curl back up. We're going to see this, need to see this back up to uptick. So this can very well come all the way down to around 35,000, 35,200. It's going to be a big area for the bulls to kind of just hold together. Let's take a look at the Nasdaq. Nasdaq 100 obviously performing very strongly. All-time high close, up 2.31%. PMO looks like it's about to start crossing at it. That is a bullish crossover. So a bullish crossover is taking place at all these all-time highs, getting pretty extended. The 5-week EMA did hold its support, so continue to keep your eyes on the weekly 5 EMA. If that starts to give way, just be cautious. Where can we potentially fall to if it starts cracking? Well, start looking at 15,750. That's just where this previous area of resistance is. And the 20-week moving average, it's clearly up in an uptrend too as well. Semiconductors. This is important because the Nasdaq is made up of, one of the biggest weightings is semiconductors. So you need to see these things move hand in hand. Well, we did have that bullish crossover, but semiconductors broke out and has been just on a monster tear. It has been trading closing week, 3 weeks now, outside of the upper Bollinger Band. RSI is getting overextended, and we're disconnected 2 weeks in a row from the weekly 5 EMA. So there will be a weekly 5 EMA reconnect. Is that next week? I couldn't tell you, but if it is, we'll probably see the Nasdaq 100 consolidate, or the Nasdaq Composite, take a little bit of a pullback or consolidate here too as well, which would mean to me that tech could take a little bit of a breather. Now, if Nvidia keeps on pressing higher and higher, then this thing is going to be holding itself together overall. And you can see here on the daily time frame, that new high right here has done so on a negative divergence. It did, rip through this area, so that was a previous area of resistance. Nice big move to the upside, quick consolidation right here, and it just continues to rip itself higher and higher. So this chart kind of does look like Nvidia, right? Like we ripped higher on Nvidia, we flagged, and then we started breaking out even further. So Nvidia is just an important one to keep your eye on overall. Nasdaq 100 broke through this channel, still on that negative divergence, which we've been discussing pretty much this week and last week. And we tagged that upper Bollinger Band right there with a little shooting star candle. If I actually zoom in on this so you can see it a little bit clearer, there we go. Shooting star type candle right here on that gap up. So there's just a lot of strength, all-time high close. Price is saying that it's very, very strong right here. Just be mindful that, a pullback, consolidation, which means people are going to, like I said, they're focusing on where the puck was at right now, but you want to prepare yourself for where the puck may go. And right now, as it stands, tech is the leader in pretty much everything right now. Okay, so as soon as that starts to go through a period of consolidation, as soon as we start to see a little bit of a pullback, you need to have your eyes on where that money may flow to. Now, another thing that's very interesting, if you just look at the Nasdaq 100 and the percent of stocks above the Nasdaq 100, these things continue to sink lower. Why does it keep doing that? Continue to sink lower and lower. As you can see, the percent of stocks above 200-day, percent of stocks above the 50-day. This is just very interesting, right? It's negative divergence. It's been heading lower. It's not overextended to the downside. This isn't overextended to the downside, but just take note that price action is ripping. These are dying off. What does that mean? It means that very few stocks are holding everything together. Well, yeah, we just discussed that, and we've been discussing that this week. Let's get into the Russell 2000. Russell 2000 was the worst performing indice here, right? Small caps got nailed, down 2.83%. Not the greatest looking weekly candle overall. And on top of all of that, we did close below the weekly 5 EMA. However, we still broke out of this over year consolidation right here. All right. So this move, is it a bull trap? Maybe. We don't know yet, because if we really just start breaking it down further and look into the daily time frame, I mean, this to me doesn't look like aggressive selling yet. Like, that to me looks pretty controlled. Like, people took profits, right? It got overextended on the RSI. Can it go lower? Yeah, we were discussing down to around 227 or the 50-day moving average, but that was a pretty aggressive move, right? And now it's getting retraced around 50% from the start of that move. So that's completely natural. It's that happens on individual stocks. It happens it's constantly happening. So yeah, and we're still right here around 232. So if this starts really giving way, we'll know, right? So if we get some more weakness in financials, which is important because financials make up a big portion of the IWM. If we get some sort of crazy gap down in selling, yeah, be very cautious. All you need to do is, have a plan for if that actually happens. But as it stands right now, yeah, there still looks like the opportunity for it to pull back further. But back to what I was saying is if tech starts seeing weakness, where's money going to flow? And my guess would be financials or small caps like the IWM. That's what I would assume. Doesn't mean that's for sure going to happen, but that is what you want to plan around, or various other indices, whatever, everyone has a different plan. Let's look at some stock market indicators. I'm doing this a little bit differently this time, throwing multiple indicators on a chart, and we're looking at the New York Stock Exchange primary index. It's a good barometer of the overall market. It's been kind of selling off right here, okay? What am I going to show you? So New York Stock Exchange, new highs. This is new lows. This is relative performance. And I'm going to go through each of these. This is the NIMO. I show this one frequently. This is the NIAD, advanced decline. Okay. And what do we got going on here? Let me just walk you through it, because the more ideals that you have in your favor, the better it is. But what I've been noticing is, one, very interestingly, the NIMO, it's been kind of getting overextended to the downside. And we're starting to see that sell side activity. And it's going to differ significantly when I look at the next chart. New highs have been falling down. New lows have been increasing. I mean, that makes sense because it's pulling back here slightly. And it still has the potential to pull back a little bit further. Now, from a relative standpoint, it has been underperforming the S&P 500. Advanced decline line is still above the 50-day moving average. So it's still in just by looking at this and price action, it's in a bull trend, but the overall barometer of the market here, the New York Stock Exchange, right, it's pulling back slightly. Now, this is where it gets interesting. This is the Nasdaq composite. And this is an important watch to watch too. So the Nasdaq composite, all-time high, right? PMO, RSI, boom, negative divergence. And we talked about this on the previous episode, but new highs, as the market has been going up, new highs have been sinking. That's weird, right? Well, it really comes down to just a few names, which tells me a couple of things, which we'll get into. New lows. New lows spiked extremely high, highest since the pandemic, and it's been building as the market's been pressing higher and higher. So we have a stealth move in various stocks, if you look at just the Nasdaq, if you just look at the composite, if you just look at the indices, everything seems fine. But then you see other stocks that are just getting completely and utterly obliterated. Okay, if you take a look at the relative strength between the composite, Nasdaq composite, and the S&P 500, actually pretty strong. We're breaking out of this area of resistance, this area of resistance, this area of resistance, and we're cranking higher. So that's actually bullish overall from a relative standpoint. And then if you take a look at the NAMO, another McClellan oscillator, this is getting overextended to the downside, which is weird because typically when you get overextended to the downside, you have the market pulling back right here, right? But we're pulling back here and we're up here. So, it's just really, really interesting. And then you have the advanced decline line did cross down through also the 50-day moving average, which, we're crossing down, which is typically bearish. Like we crossed down here and then we saw sell side activity right here, right? Sell side activity, or it stayed below there. And now we're below there again. So it goes to show you just how powerful just a few stocks can be in these overall markets. But the opportunity, like I've been saying, is it looks like, don't pay even attention to this. Like pay attention to what's taking place here as many stocks are getting completely obliterated. So is there going to be more selling pressure that takes place if these big tech names start to roll over? That is a possibility. However, if you just look at the overall price action of the markets, it looks pretty strong. So if big tech wants to sell off a little bit or consolidate, perhaps these still continue to kind of turn up because a lot of the underlines of these indices are going to start ripping. And that's a very strong possibility, especially to the point of where we're talking about rotation, right? So rotation, it's been a crazy, crazy trading year, and we've been seeing just nonstop rotations between all kinds of things. All right, let's get into some commodities. CRB index still continues to be in an uptrend. Higher highs, higher lows. And it's just good. If you just look at the moving averages, 50's up, 100's up, 200's up. Agriculture makes up, a decent portion of the CRB index. This is actually one of the trades that I took. I'm still in it. It broke out and continues to press higher here, and now it's in a little period of consolidation. Has got a little bit overextended right there too as well. So agriculture has been, very, very, very strong performer. You can take a look at wheat, corn, etc. Oil, huge hit to the downside on the last trading day, down 3%. I'm going to show this as a possibility, but this does look like it can reach still kind of skirt lower. But just know that we're pulling into this previous breakout area, right? So if we just bring that across, we're right there. That can act as support. It has there, it may here, and it act as resistance there. All right, so this is a pretty nasty candle. It looks like it can pull down further, but I wanted to show the possibility of a falling wedge right here, where if we start cracking back above this previous high, the high was at 79.33, that could present itself for a little pop there in the price of oil, which, by the way, if people aren't focusing on big tech, or if they start to consolidate back to the thing, energy and financials might be a play. Now, it can also be an early warning sign, right? Because we're starting to see these things sell off. And if you pay attention, if you look at, if you've been watching the show for a while, a lot of these run-ups, boom, in oil, they precede like stock market corrections and stock market pullbacks. I'm not going to get into this episode, but maybe another time. Take a look at gold. Gold still manages to hold above that 1840 level and consolidate. Silver, still below the 200-day moving average, can't quite get above there. I posted a monthly chart, I think it was, or a weekly chart of silver on my Twitter, and it does look pretty bullish overall, but this right now is just consolidating. We have a little bearish crossover that might potentially take place here too in the price of silver. So overall, still holding up, but it's taking a little bit of a pause right here. Copper, much stronger than gold and silver on the last trading day, up 2.39%. Perhaps we get a bullish crossover and get this PPO back above zero, and then maybe we take out this 450, and that right there can send us higher in the price of copper. Now let's get into the dollar. The dollar tagged our target on the week, bam, but then closed just slightly a little bit under. But overall, it was a very, very strong trading session on Friday. As you can see, we had a pretty big move to the upside. We talked about it getting a little bit overextended, pulled back a little bit, and then it just ripped higher to another all-time year, a new yearly closing high. So this thing continues to trek up and up. Now, what's interesting is people say, well, I don't get it. There's no correlation between the dollar actually and the S&P 500 or various equities. Well, you will see something very interesting take place. Like what we're seeing here is it's the rate at which something moves, right? That makes a big difference. And the US dollar has been actually a very, very good barometer, even intraday. Yeah, it's been like almost like the VIX index almost. Like you can see, I've been a couple of times where I see on a 2-minute chart, 5-minute chart, where the US dollar spikes up and at the very same time, if not, shortly after, the S&P 500 rips down. So it's been a good barometer. And what we're seeing here is the S&P 500 on this big breakout move. What has the S&P 500 done? It hasn't done anything. However, if you look at all the underlines, they've been falling apart on this big spike. They have been completely breaking apart. It's been, like I said, a very few names. And now the dollar's holding up in this area. Things can get really sketchy if it continues this ramp up higher. So you got to wonder, what's going on here with the dollar. Now let's take a look at bonds and yields. All right, so as we stated, the S&P 500, it's still pretty flat, but the dollar's been cranking up higher. Well, what's another important correlation? Well, yields to big tech, right? So if yields rip up higher, that and the rate at which they change, is a very strong move. That does put pressure on tech. We've seen it visually on our charts multiple times. And as you can see right now on the chart, well, they actually came down a little bit. And if they come down at a pretty good move, right, that actually eases up the pressure on tech. And we've been seeing tech rise. All right, so we have an inverted yield curve. We've been talking about that. And then the other inverted yield curve, the other curve that I like to watch is the 35, the 10-2. And this one just kind of turned over and closed pretty much, at a low for the week or right around there. It's still far from inversion. To invert, we need the purple line to cross above the black line. You can see the green is above the black. That is the 20 over the 30. That is inverted. And, it's still pretty far away from doing so. Now, if the yield curve starts to steepen, start to turn back up, and the 10 and 2, that would actually probably be good for financials. So, that's what I'm saying is if tech starts to take off, or start to, consolidate or pull back a little bit, maybe yields either pause or they start to rise, maybe that would then encourage some rotation back out of those big tech names. But as it stands right now, still tech is holding the lead. If we take a look at the 5-year, still broke out of this basing pattern. Now it's consolidating. Not much going on there. If we take a look at the TNX, the inverse head and shoulders still remains. However, we had a little bit of a shooting star type candle here on the last trading week, and it was down 2.91%. So if this starts continuing to sink further, perhaps that's just going to ease the pressure on big tech. TYX 30-year right here, and the 30-year also inverted, down 2.4, almost 2.5%. We'll just call it for the week. And on top of that, a little bit of a shooting star type candle. So really, it's just not going anywhere. It's just consolidating at this particular point in time. The TLT, the last time we talked about this, was this tight wedge, and this little candle right there is a bullish engulfing candle. And we said, if it starts breaking out of this, we can see a little push higher. And that's what we're seeing. And then we have some resistance up overhead at 151 to 150. So that would be the area to watch. Potentially, we have some more pressure to the upside, and then maybe it takes a little bit of a breather, or perhaps it takes a breather before hitting there. We don't know yet. But this would be the next area, like I said, as resistance to keep an eye on. Let's get into crypto. Now, crypto, I like using this sell signal, right? So it uses as a buy and sell signal. If you haven't watched that video, you can watch it, or I'll try to link it in the comments or whatever if you haven't watched it yet. But we had the trigger of the sell signal. Bitcoin sold off, and it's still rather weak overall, but we're seeing a nice little bounce. So I would like to see this thing start turning up here very soon, and that would make for the opportunity for a buy signal. So when the line crosses from the bottom through this, that's the buy signal. The last one was here, that was one of them, and then the last one was right here. So it's been pretty accurate overall. Now, if I take a deeper look here into Bitcoin, and I also bring in the relative strength, you can see here Bitcoin over the S&P 500. What I want to call out here is, one, we're back above the 50-day, at least for right now, okay? And you can see here, what's pretty interesting is when we cross the relative strength of the EMA, the 50 EMA, you can see here we've seen some strength. But then when it crosses below, you see some weakness. Well, we cross below, we're seeing the weakness, but now we got to pay attention to see if we can get back above that. Because if we get back above that, that might be a shorter term trigger where we might see some more movement to the upside. But mostly I want to really wait to see if that, while that turns up, or if that can turn up, to see if this will start turning up too. Because if that's the case, then we could say that, okay, this was just a little blip. It came down, tagged this previous area of resistance and support right here, and then we're going to start to move higher. That would be the best case, obviously. The worst case is this thing starts cranking down further, and then obviously this thing starts pulling down further, meaning that the S&P 500 would be outperforming Bitcoin. All right, now if we do the same thing with Ethereum tagged the 50-day moving average. If you didn't follow me on Twitter, I talked about that right there at 4,000. And, you know, for people that like to buy the dip, that seemed like a pretty decent area as it was pulling into previous area of resistance that can turn into support. And you can see here, we did crank back above the 50 EMA right here on the daily time frame on the relative strength line. So that's pretty bullish, and we're seeing some strength right there overall. The last time that has happened is right here. And you can see we saw a pretty strong move. But you can see when it starts heading down or crossing down below it, then we see that sell side take place, crossed above it, saw that big move right there. So this is an early start to Ethereum. Bitcoin still slightly below it. That's what we need to keep a close eye on. That's all I got for you on today's episode, everybody. So just to really recap. So as we already know, there's been a lot of rotations taking place this year. And as it stands right now, all eyes are on tech. So if all eyes are on tech, where potentially will they go when they start to consolidate or start to back off a little bit? And that could be various things. I've been seeing some stocks like high short interest stocks start to perk up as well too. I'm thinking that I think IWM would be where money would start flowing into if tech starts to pull off. And IWM, its top holdings, financials, you can look at XLF, you can look at KRE. KRE is outperforming from a relative standpoint. That's one that I'm watching. Okay, so yeah, that's just an opinion. I don't know if that's going to necessarily happen. Tech is still, all eyes are on it. That's where money's flowing to. Meanwhile, the stuff that I'm talking about has been breaking down, pulling back potentially, but it hasn't been too aggressive. All right, and then also energy stocks too as well. So if we start catching a bid there, I think tech's going to take a little bit of a breather, and then we're going to start to see some strength in these sectors over here. That's all I got for you, everybody. Have a wonderful week and stay safe.